Hi guys, welcome to my next video. This is Adam speaking, optionmindful.com Academy, and today we're going to be talking about how to buy your first call option contract. We'll be looking at the money option contracts. If you don't know what that means, please first check the theory of what does it mean to buy a call contract and what does it mean for the contract to be at the money. This video is intended to be just a practical video showing you how to purchase this contract at the option market, and so we will just simply skip all the theory and go straight to practice. Just as a reminder, why would you be buying a call contract, and especially at the money call contract? Well, you would be buying that because you're speculating and you're giving company a chance, or you're feeling or seeing something on the charts technically telling you that the company price is going to go up. Okay, and since you're an option trader, okay, you don't want to be just buying the stocks. You would like to use a cheaper option contract, to profit from that situation. So use some leverage that is built in option contracts. Being contracts are typically much cheaper than if you would be doing that with stocks. So you're using leverage built in the option contracts, and so let's go and do that. Let's find some candidate and do that. So the candidate I prepared for today for trading this call contract is PBR, Petróleo Brasileiro. This is a big Brazilian oil company, oil producer, sort of like ExxonMobil, except it's in Brazil. I think this company doesn't have a huge, amazing reputation when it comes to, corruption and stuff like this. Nevertheless, it looks to me like it has been very much beaten up in the early days of the pandemic, and then the company didn't fully recover yet to the pre-pandemic levels. So we have some nice uptrend channel going on, and right now we are at the bottom of this channel. Something which is telling me, that this company price of the stocks may actually go up, and it can go up significantly. We are trading right now at the levels of 880 per share, so it's a cheap stock. It's not very expensive. And what I see here is that the price of this asset or this company, this is a weekly chart, by the way, dropped significantly here on earnings, and we have some earnings announcement coming up soon. I'm going to quickly switch to the perspective of a 1 year daily, so day by day candles. We see this channel now kind of zoomed in. We're sitting here at the bottom, and I look here, the last earnings report, we had this big drop down, and now company is coming back up and sort of reaches the level of last resistance, and it is also sitting on 200-day moving average resistance. If it breaks through this, well, we have a huge chance for this company to go up in price to 10 or even reach the level of 11 or even go higher. As you can see, the channel is quite wide, so we have quite some possibilities for this. On the contrary, if we're wrong, probably the company is gonna be stopping somewhere here at the levels of 8, 750 and so on, so we don't have too much risk in it. And obviously this company is not like something super expensive, so we can, even if you're a beginner, you could easily play around, speculate, not risking too much currency and just understanding how options work practically. So my plan here is to buy a call contract at this level. What I see is also quite bullish pattern here. I see this higher lows and now some sort of level of sitting here at the resistance. So I'm thinking, this kind of like cup and handle pattern, which allows me to think that probably is going to go up. Also, if you look at the financial situation in the world right now and prices of commodities, including oil, going up today and all this currency printing, well, that gives me hope that I might not be very wrong with this. So I'm thinking, okay, I'm going to buy this call contract. How to do this now? How to do this? I'm very bullish. I want one call contract on this. Should be cheap because it's cheap stock. How to do this? So in this particular platform, thinkorswim, I have this little tab here called trade. I'm going to go there. Okay, and what it loads is basically an option chains for multiple expiry dates, and I need to choose one, right? So what is my way of thinking? I have some days till expiry. After these days, go away basically day by day. I'm going to be reducing this by one. The contract expires worthless, and the company needs to make a move in between in order for me to make money. So 2 days is very little, 9 days very little, and also, as an option trader, I know something about the Greeks, So the Greeks are telling me something like theta, telling me that, time decay, as we are getting closer to the expiry, that's going to be killing my value of my contract very quickly, like $1 per day, or it will increase also. The speed of time decay will increase the closer we are to the expiry. So I would like to give it more time, and typically if I'm buying contracts, I'm going above 45 days, typically, because time decay is very slow. The further I go away from the expiry date, the time basically ticks slower, so basically reduces the value of my contracts slower. Typically go over 45, so if I look at the 45, I see it here, contract 51. Is 51 days enough for me to see this price moving here? Probably not. And another one which I see here is 79 days. So what do I want to give Petrol Brasileiro? How much time do I want to give? Either 51 or 79 days. Well, if I'm thinking that Petrol Brasileiro needs more time to get there, I would probably choose 79 day contracts, okay? Each option contract is valid for 100 shares. This one expires in July 16th. Now, what I opened up here is an option chain with all these different strike prices here, reaching from 1 to 20. We're currently trading at 880, so I'm searching for a trade for a strike price which is the closest to the current price of the stocks, and this is going to be the contract which we call at the money contract. And in my case here, it's 9. Of course, 880 is closer to 9 than 8, so this is what I'm going to choose. Okay. Okay. Now I'm going to look at the prices of this contract, and I see that this is trading something between 64 and 65 cents per share. I need to multiply this by 100, and this will give me the premium that I need to pay for this. All right. So in order to buy this contract, you see already that there is a little pop-up showing below my mouse cursor saying buy. I'm going to choose. Look at the ask column. This is what the sellers are offering these contracts for, and I'm going to just left click on this. Okay, boom. And that brings me the order entry toolbox here, telling me what I'm actually about to be doing. So what this proposes is that I'm going to be buying 10 contracts of PBR. I don't want 10 contracts. If I had to buy 10 contracts, I would be basically controlling 1,000 shares of PBR. And that would cost me, I would have to multiply this by 1,000, would cost me $650. However, if I'm just playing around here and I have a small account to play with, I would reduce this to 1 and say, I don't need to be making huge amounts of money, but I'm also not taking huge risk here. Of course, for those of you who are more advanced, you would be trading a higher number of contracts here. So this one is going to be 16th of July, this is the expiry date, strike price 9. It's a call contract, price is 65 cents, and this is the maximum that I'm going to pay because I set a limit order. Okay, limit order basically means that this is the maximum price that I'm offering here. I'm not going to pay 1 cent more. Okay, if you provide me with something cheaper, fantastic, but this is maximum that I'm offering. And this contract is this trade order is going to be valid for this day. Okay. Choose the best exchange. I don't care which one. Okay, so what does this order look like? Okay, in terms of risks, I can simply click here, right click, and go to Analyze Trade. Okay, select that, and now I see it as visualized as a risk chart, risk profile. So quickly to describe the risk profile, at the bottom here, at the x-axis, you see the value of the asset reaching from basically, if you zoom in, zoom out, from 0 to infinity. But we are very concentrated around the current prices of the asset, which is 880, right? So it would be about here, okay? And then you can move the cursor and see how the situation on the risk profile looks like if the price changed to 8 or went to 12. And on the y-axis, what you see is basically my profits. So 0 line means I'm breaking even. If I end up somewhere below on this kind of lines, on these lines here, I'm generating risk. I'm generating losses. If the lines are above the 0 line here, this blue and violet line, that means I'm generating profits. Okay. So what do these lines mean? Basically, the blue line means the value of your contract at the expiry, and the violet line means the current value of your option contract. So if we start just here, and I would just purchase this contract at 65 cents, basically paying $65 for it. Okay, I would be at 0 line here, having the price of an asset being 880. If the price of the asset goes then to 10, which was my assumption, I would be making around 70 bucks. Okay, so I'm paying 65 to make 70. Okay, so that's pretty nice. You know, if you did that today, okay, to go to here, okay, on this slice here around 10 bucks, I will be making $70. However, if I just stayed there for the next whatever 70 days we said, and the price just moved there the last day of the 70 days, well, I would be then at the blue line because we're getting close to the expiry, and at the expiry I would be making just $36. So I would really like for this stock to make a move in order to make me some money. I would like it to go definitely above the level of 965, which is my break-even point at expiry. Okay, so if I want this thing to run, I really need to make sure that it makes some moves, because if it doesn't, the time will be decaying the value of this contract very slowly and bringing it down to the blue line. So if I stay at 880 for the next 79 days, the time decay will bring the value of the contract to negative 65 basically, so I would have a loss. Okay, I would be paying $65, okay, and not making anything out of this. This 65 bucks here, which I'm paying here, is also my maximum risk. As you can see, even if Petrobrasileiro goes down to 0 in its value, I'm not risking more than $65 on this trade. Okay, so it's not something that would basically destroy my portfolio, but has a potential to basically double. So it would be fantastic actually to see this currency double. If I was trading this trade on my account, I'll probably not wait until it doubles unless I see that, you know, the move is very, very strong and I have a huge potential of going to 10. If I see some slowdowns in price increases, for example, if we come back to the chart and I see that it goes and just somehow stops here at the level of 9.5 and just moves sideways, I would probably close this trade by that time, and that would be its level 950 more or less, and just collect my 40 bucks, which is also quite nice return of investments around, you know, around 50%. Okay, that's pretty cool. So now what do I need to do to send this order and to be filled and to actually take my profits if my predictions are right? Well, I can come back to the trade tab here and just click here, confirm and send. Okay, just gonna do that. I'm going to press this button, and what I'm going to see here now is the order confirmation dialog telling the summary. So what's my order description? Well, I'm buying one option contract valid for 100 shares of PBR, 100 shares here, valid till 16th July 2021. My strike price is 9, so we are actually slightly out of the money because the price is not even reaching that level yet, but we're very close, so we call this at the money contract. And I'm going to be paying 65 cents per share in this contract, but we multiply this by 100, so that means 65 bucks. Break-even point for me is 965. My max profit is infinite. If this company decides to go to $1,000, well, I'm going to be making a lot of money. Of course, this is not very likely, but in theory, my profit is infinite. Max loss potential is only 65, so I have a limit here. Of course, this is a little bit more because I need to pay for the option contract 65 cents. And basically my buying power gets reduced by 65 bucks if I do that. Okay, so what I need to do now is just simply send this and wait until I get filled. So when I come back to the monitor page, I can see that this order is now sitting there somewhere here, right on the first line. And when it gets filled, it's gonna end up in the filled orders. Right now market is closed, so that's not gonna happen. Probably it's gonna happen tomorrow. But of course, the purpose of this video was just to show you how this works. I hope you enjoyed this, guys. I hope you learned something. If you have any questions, please ask them in the comments. Very shortly, I would like to also recommend you to visit my Instagram page and, you know, become a follower. Go to the YouTube channel and also go to my channel, optionmindful.com. Subscribe, hit that subscribe button. And if you like using Twitter, visit my profile here, optionmindful.com as well, and just subscribe, be my follower. I have really interesting list of followers too. You could just steal them from me. So you're invited to do whatever. Looking forward to hear from you, and I hope you enjoyed that again. Thank you very much for watching. Bye-bye.